Hey folks, can everybody hear? And you should be able to see the screens. You're looking at the British pound. I'm actually, can everybody hear okay? I am actually, all good, Sam? Okay, thanks, Ray. Thank you. Good. I'm actually in this trade, and I'm going to get out of it here, so just give me a second. I took it in the futures. And let me do this real quick because this pound really moves. I'm just going to buy back here. And I'm going to go in and cancel my stop. Okay. And I would not be surprised at all if this went quite a bit deeper. Can everybody see the British pound? You looking at the screen? Okay. I wouldn't be surprised if it went lower, but I want to go over a few things with you here today. And yeah, had we started our session just a few minutes earlier, maybe 10 minutes earlier, you kind of could have watched this whole thing live, but that's okay. We'll have more that come up. So I want to show you two things. I want to spend some time showing just a very consistent, low risk, high reward, and high probability day trading application way of doing this for income, and also show you how we can do this in larger time frames to really build some wealth, income wealth, right? Okay, so on the pound here, what I did was I shorted it up in this supply zone, okay, and bought it back right here. Okay. Yeah, so Janeda, you're in this. Are you in this one too? I see your comment there. All right, so yeah, so I'm out of this, and that's okay. I'm perfectly fine getting out right here. What I do on the short-term side, you'll see this is just a 2-minute chart of the pound. Okay. All right. You got out of it? Okay, good. Now, the reason why I put the blue line here is because that's where the origin of this rally was, from right in here. I would never buy at this, calling this a demand zone. To us, this would never meet the definition of, excuse me, a little cold. To us, this would never meet the definition of demand. 59.60. 59.60. Oh, so you got 59.65. You did it. Great. Excellent. Thank you. So you got a better fill than I did. Very good. Very good. We're looking at the spot market here, but I took the trade in the futures. So if you saw the symbol I was actually trading with, BPM12. Okay. So that's the futures. Okay. You're a Chicago Wolves fan? I take it? All right. So, yeah, took it right here. Janeda took it a little bit deeper in the level. Nice job. Now, let's go over this. And again, in the big picture, this has room to fall. Let me show you why on this 30-minute chart in the lower quarter. Actually, let me make this a 60-minute chart. There we go. Everybody see how the pound over the past few hours here has rallied right into a very key supply area. We'll talk about that more in a few minutes. So I would expect that in this 2-minute chart, there's more room for the pound to fall. But I'm pretty good at sticking to my rules. I've been doing this a long time. If I were taking this as a longer-term trade, I would still be in it. My plan was to risk this to make this. And I knew the odds on the trade working out were extremely high, so I took that. Had a very similar trade, just the opposite, in the euro earlier. I'll show you that real quick here, and then we'll go take a deeper dive and discuss exactly how we do this. Now, I am curious to see who took this one. Just a second. Here's the euro. Anybody take this one earlier? This is pretty textbook. A little bit trickier, though. I imagine if you're in the XLT, you might have got it. Anybody take this euro on the 5-minute? This is a pretty nice opportunity with the dollar having room to fall. Dux, you took it. Okay. So, excellent. Sam Schill, great. Good name there, too, by the way. Just kidding. So it's good to see that people are starting to get the strategy and take it. I mean, when you can catch the turn in price, that's how you're able to attain the low risk, high reward, and high probability entry. But let's go back to that pound. Just want to walk you through it real quick. Took it with confirmation, okay, Al. And it's okay to do that, but I think, Al, you'll find that the better you get at identifying these levels, the less you're going to want to take that confirmation. But we can talk more about that another time. Let's see here, a couple questions. What are the lines on that chart about? Cheryl, if I probably better go into that in a specific session, just because I don't want to give you kind of half the answer. But they help identify the institutional order flow. Because at the end of the day, all I'm trying to train your eye to see is exactly where the banks and institutions are buying and selling. The white lines are something I built many years ago. They help me do that, but you don't need them. You can do it without it. By the way, Shy Wolves, pretty interesting games last night in the NHL. I don't know if you're an NHL fan. But, okay, yeah, who would have thought? And when you think about it, take a look at this 2-minute chart of the pounds, of the pound. So now, I shorted right here. Janae shorted up here. A few other people shorted, but why? The reason why we shorted there, the reason why I shorted there is because that's where the banks were selling pounds. That's where the dealer desks were selling pounds. That's where the institutions were selling pounds. How do I know that? Well, this picture right here tells me that. Okay, and now that's not enough of an answer for you. So let's dive a little bit deeper into it. First of all, I started my career. Good question, Ashley. Why not above? Because this is not the picture that represents banker, institution, supply, or demand. And I'll take that deeper for you. Let's do that now. What's the difference? Why this picture and not anything else on this chart? Why didn't, what's the difference between that and any of these other things you see? There's a big difference. I'll get into it right now. Yeah, pivot high is never going to be just it's never going to be where we would consider banks and institutions to be selling. But take a look. First of all, how did prices leave the level? Now, what I'm giving you is a very structured lesson in the XLT program, the trading rooms at OTA. And it's all around odds enhancers. Odds enhancer number one, how did prices decline from the level? Was this a strong drop in price or a gradual drop in price? It was a strong drop in price. So what does that tell us about the supply-demand equation here at the level? Small imbalance or big imbalance? Big imbalance. And when we say imbalance, we're talking about pure supply and demand, okay? All you need to visualize in your mind right now are two stacks of orders, okay? There's the buy side and the sell side. Which one, is there more willing demand or more willing supply? The question is not, are there more willing buyers or willing sellers? That is not that's a very wrong question to ask. Remember, there could be one seller here and 10,000 buyers here. But if the seller's order is greater than, all these buyers' orders combined, you see what I'm saying? So think of it in let me see. Yeah, trader. So I'll get into your comment there. It's a very important one. Okay, very important one. And there's a very specific reason why, I don't at all buy into that school of conventional technical analysis thought. And I'll get into that in a few minutes. So, yeah, the dollar dropping, obviously, with room below helped. So that's odds enhancer number one. Number two, price spent very little time here. We have like 4 or 5 candles on a 2-minute chart. That's not much time. That's like 10 minutes. Okay. Why was price able to spend so little time there? Because behind the scenes, there's this massive supply and demand imbalance. Okay. Tons of bank supply up here, tons of willing supply in the bank desks, and no buyers. That's why prices collapse. Lastly, and I think almost not most important, but I did not learn how to trade with candlestick charts or any charts. In fact, I promise you, the first 6 months of my career, didn't even know that charting I'd never even heard about charts or technical analysis. Remember, I started on the floor at the Chicago Mercantile Exchange, specifically in the currencies upstairs. There were 2 levels at the currencies at the Chicago Mercantile Exchange back then. I started upstairs, and that was the currency quadrant, right? So I was right in front of the Japanese yen pit, and then eventually they brought the peso in, and then the British pound were way over to my left. And I had institution orders in front of me, okay, every day, and I took those orders. I facilitated those orders from banks, institutions, money managers, hedge funds. And what was very clear was that, I could, where the market was going to turn and where it was going to go, I could tell you that because I had the orders in front of me. And what I spent a lot of time doing, just to make a long story short, was figuring out exactly what that bank and institution supply and demand looks like on a price chart. Okay? I don't need to go into all the details around that. I can at some point when we have more time. But that's what I did, and that's what I bring to you here at FX Street, and that's what we do at Online Trading Academy. Okay. Daryl, yes, we pretty much set and forget everything. As you saw, I had a stop in this trade. The target was manual because I was scrambling to put the trade on and sign into the FX Street session at the same time, and I was actually on the phone. So it was a little tricky, but normally the whole order is set in there at the same time. Okay. The arrival of entry, Daryl, not a problem. And because, do you see, Daryl, how prices drop from this area? When they drop as they do here, you can almost always expect the exact same arrival. Okay? This, every level, every supply-demand level on a chart is there because of the prior level's existence. Every pivot high or low on a chart exists because of a prior supply and demand level's existence. Furthermore, every momentum move you see on a chart is there because of the prior move's existence. Meaning, if there wasn't any supply or demand in here to stop prices from falling as they did here, you're not going to have any when prices come back. Make sense? So if it was a kind of a gradual choppy decline from the level, expected a gradual choppy rally. Okay. Cameron, it did go deep into the level, but I will tell you, 100% of the time, you're only going to know that after it happens, and that's fine with me. Okay, I shorted right here at the black line, and here's the difference. I shorted right here at the black line. Janeda beat me and got in up here. Nice job. And the stop was above here probably for both of us. Okay, so I was risking this to make this, which doesn't look great, but I'll explain that in a minute. And we made some money on the trade, but here's the thing. If I enter here with a stop up here and a target here, that means that before I do anything, in my mind, I am 100% comfortable with the loss and just as comfortable with the gain. Okay? Does that make sense? All right. Okay. Anyway, let's keep going. So, another way to look at this, and I've said this before. If you look at the supply level, this is the British pound against the dollar. Does anybody in our group here today, there's about 180 of us, anybody in our group here today have an account size to cause prices to drop like this, to cause a supply level like this in the British pound? Does anybody with us here have that today? And if you do, let us know. You will instantly become the most popular person at FX Street, I promise you. No? Ashley does on her demo. There you go. Okay. All right. Well, you get the prize today, Ashley. Yeah. So if it's so here's the thing. If it's not us, if this is not our supply, whose supply is it? Right? It's the institutions. It's the banks. Okay. I started on this side of the business. I would love to think of myself as the smartest guy on the block and this genius that figured this all out. I promise you, I am not. I probably wouldn't be I'm probably not even in the top 20 in our group here today. But what I had the privilege and benefit of doing is learning how to do this and watching this from a very big trading desk at the Chicago Mercantile Exchange. I learned that way. I didn't learn from the books. And I'd love to say I made a conscious choice to do that in the beginning. I'll admit to you, I didn't even do that. I just wanted to work where my hockey friends were working, and they all worked at the Mercantile Exchange. Okay, makes sense? So this is not something that's difficult to figure out. It's not something, it's perfectly logical. This is how it works. The reason why this may be new information to you or a little foreign is because everybody's taught to do this backwards. Trading books, conventional technical analysis actually has you doing the opposite of what you should do. There's a reason why the majority of traders lose money, okay? Most people lose money. Most people are learning from the books. There's a connection there. But I want to take this a little bit further, okay? Brad, no, actually, I'm a huge fan of longer-term trading and swing trading and all that. I just wanted to, last time I think we went over longer-term charts. I try to mix it up here at FX Street, and I think a lot of people really like to have a strategy where they can produce kind of that daily income, okay, or that weekly income. All right. Anyway, take a look. So let's take things a step further than we always do here. I think a lot of times people are focused on levels. Where's the next level? That's half of it. The other side of it, let's come over here now. I'm going to put a circle around where I shorted and a few of us here shorted. So knowing where institutions and banks are buying and selling is very important, but that's 50% of it. What's the other 50%? Knowing where retail traders are buying and selling. Once you know where the institutions and banks are buying and selling, and you know where retail traders are buying and selling, okay, who makes a fortune with that information? Anybody know? Anybody name a few groups that make a fortune with that actually have access to that information and make a fortune from it? Who has access? Who makes a fortune from knowing exactly where the institutions are buying and selling and exactly where retail is buying and selling? Okay. I wouldn't say hedge funds. Yeah, certain brokers. Oh, I thought people would throw some names out there. Okay. Yeah, you're right. Brokers, Wall Street, you're getting closer. Jew, yeah, you've got it there. Okay, yeah, those guys and others. It's not just them, but it's others. Think about it. Think of it this way. Think about the rules and laws that major Wall Street firms enjoy. Number one, and really think about what I'm going to say here. Really think about it. When you have when the rules state and the laws state that you can that you are a market maker, okay? That you're a market maker. That you have to be a market maker, and you have access to retail accounts, right? Retail accounts meaning your clients, okay? And you can trade your own accounts, okay? Think of the power of having those three things, okay? You are a market maker, which means you have a legal obligation to be on, to provide a bid and an offer. But the key word there is what is very it's not gray. It's not what is open to you is that what price your bid and offer could be. That's up to you. So you do that, and you have retail accounts, and you could trade your own accounts. Okay. Jura is asking, isn't this forbidden? Well, it's forbidden for everybody except banks and institutions. Make sense? So what we have to do as traders, at the end of the day, that is the license to print money. Would we all agree with that? You cannot lose if you have that, right? So we don't enjoy those rules as individuals and retail traders. So we have to figure out what that looks like on a price chart, okay? And what I'm telling you and sharing with you is here's what that looks like on a price chart. Let's just focus on that today and only that. If you can get that, you're good to go, right? So right here, when we circle this area, we've got the institutions and banks pegged. They can't hide. We know where they're at on the chart. Small time frame, big time frame, whatever. It doesn't matter. We can figure it out. Over here, now let's talk about the retail traders. Retail traders always make two mistakes. And again, I had the privilege of learning this and seeing this on a trading floor, and nobody taught this to me. It was just you just watch. I'm a pretty quiet person. It may not seem like that because I'm always talking to you, but in real life, I'm a pretty quiet person. I usually sit, listen, and observe. That's what I do. So I spent a long time doing that on the floor, and I can tell you, dealing with retail orders, the retail traders, they always make two mistakes. They buy after a period of buying, mistake number one, and they buy into a price level where supply exceeds demand, right? Banks and institutions supply. Making those mistakes, if you just think about it without even looking at a chart, guarantee that you're going to lose consistently according to the laws of supply and demand. You may not lose every time, but you're going to lose pretty consistently. So what I want to make sure that you do to take the next step is instead of just focusing on levels, focus on identifying that whole equation, those two parts against each other. Banks and institutions on the sell side, retail buying. The outcome of this picture that I'm pointing to now, the outcome of this equation, the outcome of this game, this competition, whatever you want to call it, is extremely predictable. Does everybody understand that? Okay? That matchup of a bank's buy order to a retail sell order, or a bank sell order to a retail buy order, I think we all agree that the outcome of that is extremely predictable. Right, exactly. Okay? So our goal is to identify that picture, not just levels, but zone in on, really have a razor sharp focus on that specific picture when it's of both groups against each other. Think of it this way. I think Goldman, you can look that information up. I'm not here to beat up Goldman or anything, and I'm not here to defend Goldman, but if you look up that information as Rob is pointing out, it's astounding. There's a big part that Rob is leaving out as well. It's how many $100 million days they have in a year. But it's all on the internet. You can look it up. Okay. Shuhi, this is market timing at its finest. This is pinpointing where the market's going to turn. It's also pinpointing where the market's going to go. So make sure you focus on that equation. In an analogy in any other part of life, if you bet on sporting events, which I don't, if you're, let's say you're in the UK and you're an English Premier League fan, and let's say you can bet on those games, which obviously you can, but no teams get points, no teams get extra goals. Who would you bet on? Who are you going to put all your money? You're going to put all your money. You're going to bet everything on this game. Who's it going to be? And again, let's say it's Man United against. You tell me, who's the worst team? The Wolves? Right? Who are you going to be willing to put all your money on the line for, assuming Man United gets no points? All right, Ashley's saying the Wolves. Right? So, okay, exactly. Chelsea. All right. Let's say, and I know we have people here from all around the world, in cricket. I think a really good cricket team is Australia, right? Let's say Australia is playing against who's the worst team? Well, I'm in the United States, and I'm sure if we had a cricket team, we'd probably be the worst. So Australia against the U.S., right? Or one of the India teams, maybe. I don't know. I'm kind of speaking above my knowledge point here, but so you'd put all your money on that game. Or if you watched the NFL last year, it's pretty much Green Bay or the Patriots against anybody, right? Okay, you're going to put all your money on the line. My point is, the outcome of those games, those competitions, is extremely predictable. Okay, extremely predictable, and that's the only picture we're looking to identify on the price chart here. Paul, I agree with you, and the only reason why I know a little bit about cricket is because my little guy had to do a paper on it. So anyway. And I spent quite a bit of time in England and India. All right. Let's move on here. So bottom line, learn to identify that picture. Does that mean you're going to make money every single time you place a trade? No. You should be right most of the time, but not every trade's going to work, and that's okay. All right. All right. Let's move on. Yeah, we can come to let me pull up a smaller time frame of the dollar here. Okay, and the dollar, we could do this exact same thing, and whoops. Now, one of the things that really helped that euro trade, let me blow this up. Take a look. One of the things that really helped the euro trade was this. Yeah, so David, we'll look at the demand side in just a minute. And I really apologize in advance if I'm missing some questions or comments. I try to kind of focus on both the chat and this. But everybody see this right here? This really helped out, and I always look at this. Okay. Right here. Let me take another little screenshot picture. There you go. Take a look at that circled area. We had a rally into an area where banks around the world were selling dollars. Okay? Same picture. That's the picture of supply. This is supply as well, but these pivot highs are not supply, and these are not supply. And I try to go over as much as I can with the strategy and how to quantify supply and demand. Obviously, there's more to it with the odds and the answers, but so the fact that the dollar rallied into supply pretty much at the same time the euro was declining into demand makes sense. Now we're stacking the odds in our favor, right? I'll take this one step deeper as I'm going to change the chart and look for demand now. But if you were to ask someone, if you had the choice, if we were to ask you, and I said, look, you have the choice. You can you can be on a trading floor and trade your own accounts, or you can do this from home and look at a chart. What would you want to do? I'm telling you, most people are going to say, oh, yeah, the trading floor, because you can see all the orders, right? I used to think that way. I used to think that way as well. However, I don't think that way anymore, and I haven't thought that way in a long time. I would choose the charts hands down any day. And the reason is this. On a trading floor, while I was with one of the biggest trading desks at the time down there, and I was very close to Goldman Sachs and Morgan Stanley and knew all those guys, and I could see, their orders if I really wanted to. I still wasn't able to see the entire planet's orders. Does that make sense? Where's the one place where you can see everybody's orders? All banking institution, all retail. It's the price chart. Does that make sense? Okay. Let's see. George, I'm not sure where you're getting those prices from, unless you're talking times there. So let's look for demand, and now you need to know what that picture looks like, and that's why we focus on it. Okay, let's take a look for some demand. So the dollar right now is at this level. It could certainly bounce from here, but this is not the picture of demand. This is just a pivot low here, not demand to us. And what I was pointing out in the trading room yesterday is that we do have this pocket of nothing down here. And I would be very surprised, this circled area, the area I just circled, I'd be very surprised if the dollar didn't fall through that area at some time in the very near future. Could happen today, tomorrow, but anytime you kind of have that pocket of nothing down there, you're usually going to really just go eat that up. Charts usually come back and fill that. Of course, we would look for the dollar to rally off the bottom of that level, but anyway, so that's what we had today. And what I want to get back to really quickly, though, is a little bit more kind of hardcore strategy. To keep this kind of simple, look at this. Yeah, Ali is making a good point. I see this comment sometimes. Sam, sometimes I miss entry by just because of difference of a few pips. So, Ali, correct me if I'm wrong, but what you're saying is you're usually right in finding the turning points, but you miss your entry. You just don't get filled, and price goes in the direction you thought it was going to go. Is that the issue? Or is that kind of the main issue? So Ali is saying 100% correct. Yeah. So what is Ali's real issue? The issue is Ali is why is that happening? Right? Joanne's is saying that happens too many times. That is happening 100% because now you are competing with banks and institutions. You're buying and selling where they're buying and selling. Does that make sense? That's why it's tough to get filled in those areas. Right? That euro, the first time it came down, I missed it. I was trying to get it at 45 in the futures, and it touched 45 and shot right up to 56. I was like, wow. Obviously, there's a big bank that has orders here. So, it did come down again. But, so those of you that are kind of chiming in now and saying, I have that issue too, that is 100% because now you can pick the levels. but now you're buying and selling where the banks and institutions are buying and selling. Make sense? Okay. So yeah, as Dux is saying, now you just need to front run the banks and institutions. How do you like that? Wouldn't that be fun? We're kind of joking, but that's actually what you kind of need to do sometimes. Your best levels, if you've noticed, you need to put your order just before the level and get in just before they do. Anyway, it's and the best part is 100% legal, right? Okay. Orders can be canceled, but I will tell you this. Most banks and institutions, and really any consistently profitable traders, they're basically using limit orders, not chasing markets ever. Again, on the trading floor, the institution orders were almost always limit orders that were put in very early in the morning and didn't meet entry till sometime later. And those orders hardly ever got pulled. I mean, every day a few orders would get pulled, but we had, hundreds and sometimes thousands of orders, right? Retail traders, market. The phone would ring all the time. Buy 5 at the market, buy 10 at the market, sell 5 at the market. And they'd always lose. You know what I'm saying? So, all right, David, let's see, 15 pips. Okay. Let's see, I couldn't read everything you wrote there. Yeah, so let's move on here. We can go look at another market and some other time frames. Someone is saying, I don't care what market we look at, but someone just typed in the dollar yen. Let's take a look at the dollar yen. Den, you're asking a great question. What's your strategy for scaling and letting the trade run? Letting the trade run, now I'm not exactly 100% sure what you mean by that, but I have obviously a very good idea. Obviously, generally that means just letting the trade go. But obviously there's some stuff missing from that. Where exactly do you let it run to and how long do you let it run and all that? I could tell you banks and institutions almost never think that way, and I know I usually don't. And I'm not, and again, my definition of letting it run may be a little bit different than yours, but there's always a plan. You're risking this, to make that. Okay. I can tell you I have a strategy. Let me see. Can you see when I switch screens, or do I have to take another picture? Can you see the screen on the chart now? Can you see a bunch of black charts? Oh, okay. I keep taking more pictures. I guess I don't need to do that. Anyway, what I was going to get at, I have a strategy here that we certainly don't have time to go into today, and it's 100% mechanical and all that. No thinking. It's just, and it's all the supply-demand strategy here. And I can tell you every single trade has the same risk and the same reward. Always. Okay? And again, that's just to answer your question there. Every single trade has the same risk, same reward. And do you know how many times the trade goes on to like triple, quadruple, even more profits than I got? Lots of times. In fact, every week that happens. But it doesn't matter. I want to spend, the goal is to just have a very, predictable, I'm trying to give you the short answer here. The strategy is very profitable, and I just want to, and then from there you just increase size. The goal for me is not to go for larger moves. If I'm going for larger and larger moves, letting things run, that's going to be, I don't want to say harder and harder to do, but those opportunities, in other words, think of it this way. I'm going to be able to make 3 points in the S&P, for example, much easier over a long period of time. It's going to be easier for all of us to make 3 points versus, forget the risk for a minute, just forget the risk. It's going to be easier for us to make 3 points than it is to make anything above 3 points, right? Make sense? Okay? So if I can risk, say, 5 pips in a currency or 10 pips in a currency to make 20, and I could do that consistently, if you think it through, I think you're better off just sticking with that and increasing your size versus risking those 10 ticks and trying to go for 30, 40, 50, 60, 70. You see what I'm saying? It's always going to be much easier, and you're, more often you're going to be able to get those 20 pips than the 50, 60, 70. And you could just increase your size. You see what I'm saying? Okay. Think like a bank. Think like an institution. And, oh yeah, sorry. Dollar yen. Let's see here. So let's look at the yen. Okay, yen is bouncing here. I think someone, when they typed this in, they said it's hitting demand again or something. Let's take a look at what is this thing hitting. It's going to blow up the larger time frame here. So we've come down to a pivot low. In the very big picture here, we're looking at a big picture chart of the yen. Okay. Take a look. We're down to this area. Okay. Not in love with this. We'll see what happens here. So you see how price is basing sideways here? This is a much larger time frame chart and example. Okay. And yeah, Paul, the curve. Maybe I'm going to take a note. Maybe we'll go over that next time. We'll make next time very lesson based because we don't have enough time left. I don't want to give you part of the answer. You know what I mean? It's a very important topic. Sure. And if I forget, remind me. But I won't. I'll write a note. All right. So price is basing sideways here. If we get a rally out of this area, I would say up to 81. We'd have to go probably almost to 81.50. If we go up to 81.50 from here, meaning we don't fall below today's low, if we go up to 81.50 from this area, I would then buy a pullback to this base for a move up to 82.10. Okay, but that needs to happen. We don't know that that's going to happen. Okay. However, I would not be that interested in buying this pullback into here. Or this. This is already a pullback into here. This is already a pull. This whole thing is a pullback into here. These are not fresh levels in this larger time frame. That's not to say that there's no buying opportunity until way down here. I'm just saying in this time frame, right? There's probably plenty of little 5-minute levels below, but down here at 79.80 is where we start to get into more fresh levels, meaning where you have tons of bank and institution demand and buy orders. Okay. So we would watch for that in that time frame. Having said that, let's go down to something quite a bit smaller. All right. So here's a little 2-minute chart of the yen. In fact, let me just make this maybe a 5-minute chart. Clean things up a little bit. And let's look. Yeah, Luca, I would agree with you. So 5-minute chart, we have exactly what I was hoping for, not to 81.50, but now we have this little area of basing right here. And remember, at Online Trading Academy, there's a very rule-based way that we draw our lines. There's a reason why I'm cutting off the wicks on top and not cutting off the wicks on the bottom. Okay? Now, the reason why I want a rally that we're getting now before buying in here, I want to know that all the supply in this area is gone. I want to know that every order sitting in this range is filled. And now we're getting that evidence. I'm thrilled that this has rallied up here without me on it. Okay? Because now I know that demand exceeds supply here, and I know there's no sell orders left here. So now all we need is a pullback down to 80.84. And because this looks like a good level, I'm going to look to front run the banks and maybe get in at 80.85. Make sense? Okay? And you might think, well, what if it doesn't come back? Or how long am I going to have to wait? Don't think like that. That's the wrong way to think about this. I'm just going to put a line here. I'll put a green line, will be the buy. Okay. And I'll put a red line for the sell. Which would be right under the area. And let me just take another picture. Okay. Now, there's 200 people in our session here. if everybody buys in our group, buys at this line, I promise you price is going to come down lower. Because now, when we buy here, okay, what are we forcing the banks to do? We're forcing them to sell. You think they want to sell here? No. Okay? So, now also, what do you think is going to happen to the spread here when price comes down here? Especially if all of us go to buy it. Is it going to get wide or narrow? It's going to get very wide, yes. Okay, the spread's going to widen up down here, even though this is the yen, because we're forcing the banks to sell, so they're going to have to price in their profit first, right? Okay, so you'd probably expect something like, price to come down, and they'll probably get a quick bounce, and then price will probably come deeper, just like that euro did, but that's okay. And again, you only take the trade if you're okay with the risk. Make sense? And when you're doing this the right way, your risk should be such that you are just as happy with a loss as you are with a profit. I mean, you're just running a profitable strategy. That's what this needs to get to. And if you're new to this, that's difficult. You need some confidence and stuff. Think of Las Vegas. They have tons of losses every day, right? Tons and tons and tons of losses. Do you think they care about the losses they have? No, the losses are part of their strategy, part of their very profitable strategy, right? Okay. Your level of accuracy is going to depend on your ability to identify proper levels, and that depends on how well you understand, know, and practice the odds enhancers. That's what this is all about. Yeah, I believe today is recorded. Okay. I would start out the Shy Wolves. I would not risk more than 1% of my account if I were starting out at this. Okay, and once you get better at it, then and if you understand the curve, when you get opportunities that are far out on the curve, you probably want to increase your risk a little bit. Okay, all right, we're back on the euro here. By the way, I did just type in my email address up there, seiden@tradingacademy.com, just so you have it. Let's take a look at the euro, and I want to look back just a little bit. Let's go to like a 10-minute chart and see what we have here. Okay, whoops, let me scrunch this up a little bit more. Just a second. We'll go to a 15-minute chart. I'm trying to give you the whole picture and something we can work with. Oh yeah, so take a look at the euro now. Shawels, yeah, I do some of all the XLTs is really the best way to put it. Let's take a look at you can always send me an email on it also. If you have questions about the XLT or how to take this further in the most cost-effective way, you can always send me an email. I really don't have anything to do with sales, so my goal is that that you're successful. So we work it out like that. That's Seiden@tradingacademy.com. There it is. If you have any questions. So take a look at where the euro is now. Okay. This is not a bad level, both in the small time frame and larger time frame. I'm going to put this right here. I don't know that the euro is going to rally up into this level again. If it does, let's see how deep we went into here. All right, so this is a good sign. Let's take a look. So if the euro goes back up into this level, notice we have not, price actually didn't touch that level. So that's a pretty good sign that there's some supply up there. The only thing we have to be careful with, again, remember that dollar has the dollar has that room below. Okay, it's got kind of that pocket of nothing below. So, but there is a little. I remember there was a little bit of demand in there. So let's see if we can. Shy Wolves, you got this. Okay, good. Yeah. So there's a nice little level. and of course, this level up here, not bad either. But make sure before you even consider taking these trades, you look at the dollar. If you're going to short the euro supply, make sure the dollar's into demand. Make sure the dollar has room above. Okay? Actually, the dollar doesn't absolutely have to be into demand, but you have to make sure if you short the euro that the dollar has some room above. Make sure the dollar is absolutely not at or near supply. That's the key. Make sense? Okay. Good. Yeah, pretty close, Maurice, but I would always go a little bit higher time frame on the dollar. I'd look at both. I'd look at the same time frame and a little bit higher. Okay. So I know we're out of time here, but there's my email address again, seiden@tradingacademy.com. I know I talked kind of quick today. I just always want to make sure we get all this information out there. Hopefully this is helpful. Appreciate your time, and believe me, we are well aware of the responsibility of going over this information with you. This is about your finances, growing your account. Money is a big issue, so we don't take that responsibility lightly. Anyway, have a great day, everybody. Email me if you have any questions. We'll see you next time.